It's been a very eventful last few days. Don't forget, we also signed the EU FTA, and that's on top of, then we have this budget and the big deal with the U.S. I think there is a lot more required to get global confidence. These are important steps. These are very, very important steps in that direction. We know that global investors are very fixated right now on the AI theme. India does not offer too much on that. So we need to get our house in order, get earnings in order, and earnings are coming back. And these three events will further put the confidence for global investors to look at Indian market at a more reasonable valuation. Valuations and earnings are the most critical thing when people evaluate markets. And today, when you look at valuations of Indian market, they are below their last 10-year average. The India premium, the India large premium to emerging market has come down dramatically over the last 15, 17 months. It's still at a premium, but that's come down quite materially. And the three events are reinforcing that India is a long-term story with the short-term headwinds abating as we speak. The U.S. tariff deal, in our view, was the biggest irritant for global investors. We still await the details which are going to come out from the deal, but it's a very important step in the right direction for investor confidence to come back in India.
But based on what you were saying there, Nitin, am I corrected to understand that in terms of order of importance right now, it's earnings and this AI exposure or lack thereof that might be more important for where markets head in India versus some clarity on the trade deal?
No. Trade deal was very, very, very important. Right. It was the biggest worry for a lot of investors. India was one of the very, very few countries who hadn't had a trade deal, and that leaves a lot of uncertainty for investors on an ongoing basis. Rupee was also getting impacted because foreign investors were not investing into India. There are multiple reasons why they're not investing in India. Rupee was also getting impacted. So the trade deal was very, very, very important. But ultimately, after the trade deal, you need to get earnings and valuation on your side. And that's what I was saying, that we need to get earnings back up, and earnings are coming back as we speak.
Okay, so before we get into the earnings, and just one more question on the trade deal. I'm sure you've taken a cursory glance at what's been covered and what's been agreed upon. Yes. Are there any particular sectors that investors should look out for from this trade deal that might get some upside, whether it be big or small?
I think, so overnight in the U.S., the software and SaaS systems have taken a big knock, but otherwise, the trade deal takes away a lot of uncertainty over the issues of H-1B visa. So the tech sector could have benefited from reduced uncertainty on visa issues directly because after the trade deal was signed. Of course, the heavy employment sectors like textiles, small machineries, and even gems and jewelry would have taken a big step positive because of the trade deal. The uncertainty on those businesses were very high. Broadly speaking, those are sectors which were getting a positive impact immediately from the trade deal. Others, there is obviously the big play that India is looking at, China +1. Now, interestingly, this is not the first of the trade deal. It is the 20+ trade deal that India has signed. India has recently signed with EU, as we earlier discussed. Now, with these trade deals in a pocket, or we don't have the final details yet, but India could actually be in the pivotal role in a pole position for China +1 opportunity in manufacturing too. So that's going to be a longer drawn outlook, but that was completely done away with. People are not talking about China +1 in India. Suddenly that is back on the table.
Okay. Since we were talking about earnings, let's get into it, because we are about to get into the thick of earnings season out in India. The argument last year as to why Indian markets were not as badly hit as expected was because the Indian government and India itself was able to successfully pivot towards stimulating the domestic economy via those GST reforms and all of that. Do you think this is going to be the more important determinant for earnings season and the outlook from folks like Kotak Mahindra when we're looking at earnings right now, that it's going to be still how strong domestic consumption contributes to earnings in the years to come?
So, when you think about it long term, why does India attract global investors, and why was India a key overweight market for global investors? Because India's earnings were secular. India's earnings were higher than the rest of the emerging markets. And for the last post-COVID, India did a very great job in demonstrating that India's earnings were significantly better than other emerging markets. But we faltered in the last 18 months odd, where other emerging markets came back, maybe driven by AI theme, but they were better than India on earnings. And now the earnings have to come back. We had a year where the earnings were struggling. Possibly also nominal GDP growth was also below expectations, or it was it was all-time low nominal GDP growth last year, and that's coming back up. And now we're seeing a lot of tailwinds in earnings, banking in particular. There's a lot of tailwinds, and consumption as as you said, GST-related cuts will boost some consumption. Obviously, we have to look at how profitability moves up. Demand is moving up a bit, but it's still a little bit of first start. Then you have to look at the numbers. Numbers are looking, so far, numbers are looking okay. They're not looking bad. And the outlook of converse look reasonably strong over the next 2 years.